The largest move in 11 years just occurred for Tesla, and if you were lucky enough to pick it up on the island reversal, well done to you. But now what's in store for it? Today we take a look at the options, but more importantly, we look forward into next week. Big earnings is coming for some of the biggest tech stocks, and we've got the data surrounding what happens on the Nasdaq next, and more importantly, what this large move in the volatility really means for us as traders and investors. Usually it's reserved for something big, and it's starting to get to the danger zones. In today's video, we cover stocks, commodities, and cryptos together, including whether Bitcoin is getting ready for another large whipsaw. Well, welcome back everyone to The Daily Show. My name's Tom, and in today's video, we have a lot to discuss because there are plenty of opportunities on the horizon right now. Now, of course, Tesla was the big discussion point of the last 24 hours, moving up 22%. But as we reported on around 2 weeks ago, we always expected this earnings season to be all about the single stocks. So make sure to subscribe and smash that bell icon as we're just kicking off when it comes to the biggest tech companies in the world. Now let's discuss first up volatility, because this is really the crux of what's happening underneath the hood. A big move could be on the horizon, and the reason why has to do with the VIX plus the move. As Jason Gottfried over on X says, whenever we reach this 150 barrier, we've often seen some extreme volatility in markets. And this has sometimes timed in pretty well with highs. And more importantly, when it's happened at all-time highs, which is the last time at 1996, we went into a corrective path. Now, could that be happening again into the end of the year? Well, there are some good, some bad, and some ugly signs. But do remember, a lot of this is reserved to single stocks. So that is that whenever we see Microsoft, Apple, Amazon, or any of the others basically giving out their reports, we're going to have to expect large implied volatility from the options market. We just saw 22%. Of course, the market expected about 6 to 7. But this is the thing about this earnings season. It's completely different to any of the others we've seen in 2024 so far. Nasdaq Composite after going 32 sessions without consecutive down days. Now, you may not have known this, but every time we get a sell over the last 32 sessions, we've always seen a buy the next session. Now, we have just had that again, and of course, whenever you see these things, it bodes well for the next 2, 3, 6, and 12 months. In fact, it's 100% read with a very nice return when you look at the next 12 months on average. And this is lining up with a lot of the things that we've seen before. Whatever bearishness does happen in this market, it's likely that the big funds, especially the ones that are behind, are going to want to buy the dip. But what I found most surprising about this week is how fast sentiment has switched. We've only seen a little bit of selling, yet the bears are back out and they are parading around at 30% almost as a read of the overall sentiment here in the reports. The bulls completely got dissipated. The amount of people that are neutral increased to pretty much around the average. And what we would call this is, in sentiment survey results, a balanced market. So could markets continue to drive up off this? Well, of course they could. And as we'll see in the options market in just a few moments, things are starting to go both ways with a very neutral read and a huge amount of put walls starting to come into this zero DTO options market once again. Information technology. Let's discuss the idea of an overall market that becomes saturated over the next year. We've just seen a very worrying stat from the opportunity of huge volatility on the horizon, but we've also seen a very strong stat from the Nasdaq and how it's been performing. What if information technology was to become 50% of the market, though? Would that be a worrying sign? Well, I think the short answer is yes, it would, but we're already sitting at 32.19%. And I know you don't want to hear about Tom Lee's concept, but I've got a quote here for you. Due in part to ongoing global labor shortages, technology is likely to grow from 30% of market cap to 50% of market cap. Now, of course, if that happens, we've got a totally different opinion on it to Tom Lee, which is that would be effectively a concentrated market. A lost decade could be coming, and it would be, I think, catastrophic in some ways towards how index investing will be seen over the next coming years. We will, of course, be watching this story, so make sure to subscribe because this is going to be probably one of the most important factors over the next 12 to 18 months. Now, speaking of 12 to 18 months, September's lack of selling was very important from the perspective of what tends to happen into the end of the year. Remember, on the channel here, we're very bullish into the end of the year, and the main reason is that the stats, the breadth, everything else is starting to point towards a decent return. But what might surprise you is it may not be in all of the sectors that you usually expect. Take a look here. Whenever we've seen a September at all-time highs that doesn't end up selling off, we've usually had a pretty good return into the end of the year with a minimal style drawdown. Somewhere around 4% on average is what you expect. And of course, so far, we've only really seen about 1.5 to 2. Now, this is where things get a little bit interesting. The 96th percentile. In our previous video, we discussed the idea, and this is a blurry screen, but basically what it's showing us is it's showing us there is a massive discrepancy between small caps and large caps. And when you start to look at the Magnificent Seven and you compare it to, of course, the S&P 600 forward guidance on small caps, you'll notice the discrepancy in valuations is extreme. 16-ish to 15 and a bit versus about 29. Now, this is something that we haven't actually seen really happen too much, pretty much from 2018 onwards. So this is something that we've had from here, but we didn't ever see it before, is what I meant to say. Now, why is this important? Well, because it means there could be a catch-up play that's finally going to happen. And we've been discussing the idea that maybe the Russell 2000 and more so the S&P 600, so that 500 to 600 slot of stocks, quality stocks with quality earnings that are actually starting to really grow, they're kind of looking like they could be like AI plays or improvement plays that will eventually enter into the S&P 500 as some of the old technology and old companies get kicked out. Now, here's another positive sign for the Russell, and you might say, what the hell is going on here? There's some pretty big max losses. Well, actually, interestingly enough, basically we've seen 5 straight losses on IWM, but it's still holding 5% above its 200-day moving average. So basically, yes, it's seen a sell, but in general, it's still pretty strong against its long-term, let's call indicator. Now, only times we've ever seen this, and there's quite a few here, we've generally had returns that would outweigh the maximum drawdown by a factor of 2 to 1. And you'll notice here that when we look at the max drawdowns in terms of median and medians, we were only seeing around 8.79 or 6.83 over the next 12 months. And more importantly, we were seeing around 18% when it came to the gain. Now, this has us thinking, will small caps finally play the game? Well, a lot of this has to do with whether we're going to get a pullback or we're going to just continue to rise up. And most importantly will be breadth. Now, as we've seen recently, there are some signs here which we can start to kind of tick off when it comes to just the pullback in time, which is the sideways market action we've seen so far. And the first one of those is sentiment surveys. Of course, we've seen bears regain control of the market in terms of being around again in only just a couple of days of sell-off. Of course, cycles show peak mid to late October and then sell-off through November. This is certainly still an opportunity, and seasonal volatility and all of those types of things are still here. The move in the VIX being at around that 150 suggests a flash sell could happen at any time, but again, we're not expecting an extremely bad flash sell coming into the end of the year. If we do get a correction, somewhere between 4 and 6% would be kind of within the stats. A lot of people like Citi that we've already bought up expect over 10%. We think that's reserved for 2025. And there are some good stats and things that we've shared recently around that. So what about the Russell? Well, the Russell technically has a good run into the end of the year. Traditionally, November and December are pretty good periods for the small caps. And into election, they tend to struggle right around up until that November switch period. So will this be the same? Well, we haven't really seen what I would say is the typical seasonal sell-off, but we have seen a little bit of weakness since around October 21 and 22. So if everything sticks to the same stats that we've seen in the past, at least from here, and considering we got a weekly breakout, remember only a week ago on the Russell, this could be seen as a swing trader's opportunity on these small stocks. Where I think the bigger thing though lies, and we might do a special about this if you're interested in the comments down below, is to discuss the small caps that are around that 500, 600 to 650 type of stocks. Maybe not the whole 2000 Russell, as that has a lot of crappy stocks in it, but maybe it's those ones that are starting to improve, starting to get the momentum, and who knows, in the future, they might even be part of the big S&P 500. So with Q3 reporting, we basically know that this is a big week, and we've seen pretty much all of the major stocks come out that are part of the S&P. But as we know, it's really about the tech ones, and they're coming over these weeks here. So 28% of the S&P 500 will report next week. Then we go down to 9, and then we kind of trundle on to the end of the reporting season. So what could happen next week? Well, what if we disappoint on some of these big tech stocks? We just saw what happened on Tesla. It moved up 22%, and the options market was only expecting a plus or minus 6.2%. That's clearly a gamma squeeze, and we'll see how that's resulting in the options in just a moment. But remember, these are the types of things we're looking for. And as you'll see in a moment, we already knew that there was a large transaction coming in on Tesla. We saw a buy the dip. A few of you guys have messaged me saying, my goodness, that was the best trade of my life. And yeah, I could see why you were kind of, let's say, gambling, inverted commas. Of course, gambling with statistics on the buy for Tesla. And actually, it was one you could pick up in after hours trade. So always make sure if you do have the opportunity to have a broker with aftermarkets trade, it would be a good opportunity to have one along with your other brokers, because that was an opportunity that was certainly there and quite replicable after hours. October 22nd gave us one of the dark pool transactions that so far led to a little bit of correction on the S&P. Now, previous times we've either had a pullback in time, which is basically just a few weeks of sideways, or we've had, of course, more correction paths. This was an unusual during the day dark pool activity trade. And of course, we will be looking over our weekend video to see whether and put it together whether the Russell, the Dow, the Nasdaq, and the SPY have all had a lot of dark pools at the top. If we continue to see this phenomenon, it could suggest that we're going back to, let's call it mean reversion, the weekly 20 moving average. Now, where large trades are at the beginning, large trades have just closed. Someone absolutely took some profit today on Tesla. It was probably this bro down here, and I would say they're pretty happy with themselves. They bought the dip on the 10-10 event. They've seen it since hold, and of course, this earnings was absolutely phenomenal for the stock. It pretty much gamma squeezed. I can imagine all of the people tweeting and going wild about it. Is it time now to get into Tesla? No. And this would be a very bad idea to get into Tesla here because, of course, you've just seen a huge move. It's absolutely flurrying, and then it might make a new high here. Maybe it goes to 300 in one foul swoop. But as we know with Tesla, the thing about it is it's not a great stock to get on when you're going up to FOMO resistances. Instead, it's better to either be early, which some of you were, or, of course, recognize that there will be a pullback, and there will be a pullback at some point. Even if it goes to 300, I wouldn't be surprised at all to see it back at 260 at some point in the horizon. Let's move over now to rotations. Gold is still the best on the 5-day. Home builders is still the worst. And as we know, with KRE and home builders being the worst sectors, they're a little bit of a warning sign for maybe some slight weakness here until we see some strength. Consumer discretionary actually did amazingly. Why? Tesla, of course, because that's part of consumer discretionary. And home builders kind of regained itself a little bit over the last 24 hours, with gold suffering the worst. And as we've warned, even though we love gold, we had a great run on it over the last 2 weeks. Silver hit our targets, and we have to believe that this is now a correction or a pullback in time. There's going to be some sideways action here on gold and silver for a little bit of a period. Now, speaking of S&P 500, let's move over here before we look at the options. First up, advanced decline line was slightly up on the session, which is showing a little bit of breadth buying, which is not too bad. We also saw the market hold within the zone, which of course we had to suspect it would based on our 0DT analysis, and there was no real waterfall effect just yet. We'll look at the options in a moment there. We did also see the daily 20 moving average finding some buy pressure and the market holding above our VWAP here, which I think is also key. Creating a long leg doji, we're not sure whether the bears are in full control or the bulls are trying to buy the dip, but we do know where the bear pressure is going to be. Around 58.40 to 58.50 is a critical zone. So let's move over to the options and take a look at this, because I think it becomes more clear as we start to look at the call levels. Have a look here at the 28th. Now that's next week. Look at the calls on this 58.50 strike. Wow, that's going to move super positive gamma if we manage to get that high. But what you might notice is that the puts have come in fierce for Friday. A lot of guys positioning both on the bull and the bear side, with 57.80 being the major support low, now becoming the number one strike for the next 24 hours. If the market wants to break back below 5,800, it could create what we call a cascade waterfall effect, but we do expect 5,780 to be a very tough zone for the market to break below. And somewhere between here will be effectively what we call maximum pain, where if all the market was to expire, around that zone, that would make the most amount of money for the hedge fund traders. Some fascinating stuff going on here, though, in the 0DTEs, and we continue to see very interesting strikes moving forward. We'll, of course, update on the weekend video here. The next 24 hours is going to be very important because we see a true battle between the bulls and the bears, and it's hard to pick a side here. We'd have to say negative gamma is starting to take over, but of course, we'd need to see price action pushing below 5,800, and we closed at 5,810. So we need to see below 5,800, below 5,780. That's going to start moving into the 5,700 strike. That's the key big support line on the S&P 500. Now for Tesla, well, it's positive gamma all day. We knew this already. Once the market opened, it got through 232 and held that zone and stuck it. It was basically just everyone trying to hedge themselves off. As we can see, we're traded at 260, which is a resistance level. And for Friday's expiration, you have to kind of think that the market might try to get back underneath 252. So maybe a little bit of profit taking here. That large, big trader has said, you know what? Fantastic profit, well done to me. And they've celebrated their 22% in pretty much a couple of sessions. And they're probably saying, you know what? I'm not going to go with this just yet. 250 is the major strike, though. So if the week does manage to close above 250, it could create further gamma squeezing on this market. When we take a look at NVDA, it's still floundering around 140, which we know is a big key strike. You can see it here. And again, if we get above 140, close the weekly, that is a good sign for NVIDIA. And it's going to push, you would have to think, towards 150, which is the next major strike. So for now, NVIDIA is still positive, and we've been reporting on that for quite a few weeks. Let's move over to the lead indicators. Do we have a bonds market that's freaking out right now? Well, the answer is not really. We do, of course, have the MOVE plus VIX index above around 146 heading into the 150s. And we know that when we tend to see these types of periods, which are quite rare, by the way, you just don't see that this often, that this can sometimes precede problems in markets. And while we don't have that many reads on it, we do know that it's usually reserved for some big volatility that could be on the horizon. I would like to think at the moment that it's about single stocks, though, more than anything else. Here's home builders. Again, the Wyckoff continuing to be weak. You can see here two long leg dojis. We're looking towards gap fills at least at 115 or a support at 112. And if this continues to weaken, the rest of the market doesn't, there's a decent chance that there could be a 5,700 on the S&P moving forward. Let's talk about treasuries. They held up. We saw US 10-year yields start to struggle around that supply zone we discussed. And this is a good zone, we feel, for treasuries if you're somebody that's looking at holding it for 12 to 18 months. Now, of course, you make your own decisions. We're just talking about from a technical standpoint. But you can see the 61.8, 75 demand zone, etc. A lot of people super negative on treasuries, but I think they were negative on it a little while ago after everyone went positive, and now they're trying to use maybe retail as exit liquidity. Let's find out. Dollar index hit the resistance again, had a little bit of reaction to it. I wouldn't short the dollar here myself just yet. I'd probably be looking for it to take this structure out at 103. But generally speaking, this makes sense to the yield. So if we have a look at yields, you can see the yields dropped, the dollar dropped. At the moment, dollar is at resistance. Copper, struggling a little bit. I would have thought we would have found more strength here. You can really see the 4.4 acting as super resistance. We have some people in our community that are actually short copper at this level, and some people that are buying it around this level. And I think it's one of those particular positions that makes sense from both locations. You could be a buyer down here with stops below the low, or even below the low on the left-hand side, which is a little bit safer. Or you could be a seller up here recognizing that this supply is good. It's both are valid. If we get above 4.4, I think we're going to make a new high though over here and continue towards 4.5. So I'd like to see a 4.4 break over the next two sessions if we can. Let's move over to gold. Gold is weak. There's no doubt. Small time frames don't look strong. They look weak, and we were kind of talking about this being a short area over the last 24 hours. Now, I don't really like to short gold. Why? Because I'm way too much of a gold bull here on the channel. We all know this. I'm going for 3K. And it moved up to 27.40 again. That's a pretty good short area, and so far it has found resistance. The same thing with silver. It hit our second TP zone. It's going into a corrective path. There's nothing wrong with that. Even if it sits here and chops for a while, it's because everybody went on and started posting silver squeeze and all this other crap on X and everywhere else. And unfortunately, when everyone's on board something, as you know, generally the move is over at that stage. You've got to be early, you've got to find edge, and that's what we like to do together here on the channel. Let's move over to US oil. Now, this one has improved and it's weakened a little bit. I liked the last 24 hours. I'll be real, I thought it was pretty good until we saw this new lower low. I didn't really like that, but overall, the structure is still moving towards potentially the bull end. Again, there is a case to be made for the bears, but in this case, I would say I'm still more bullish than bearish, and I like it from a swing-based perspective. Now, if you look at the daily, it looks kind of nasty. I understand. You've got this big rejection wick. Of course, we really want to see a closure above 71.40 on the daily. That happens, good sign. At this stage, it's a bit of a fight. We'll see what happens. Tesla, wow. Great work, everybody, if you kept on holding this one. My kind of suggestion or thought process was scale back a bit here, leave some on to hodl. And I tell you what, considering the move in one session, I'd probably scale out myself. But in this perspective, I guess the thing here is that could it go to 300? Well, it certainly could. This is a massive, massive injection. And we have to look back at the previous times of how these things tend to fly upon each other. The thing about Tesla is it always moves really aggressively and then it has horrible pullbacks and it always overshoots. So if you look at any of the Tesla kind of runs in the past coming off things, they feed upon themselves with massive positive gamma. So this may not be the stop. Yes, okay, we've seen large transaction go through. I'm not doubting someone just took some profit. But at the same time, if it breaches this 270, 265 zone, could it go to 300? Yeah, it certainly could. And I think that's the problem for a lot of people. It's one of those ones where you've got to kind of like descale yourself a little bit and then say, look, I'm going to ride it until there's no more riding anymore. Because any way you look at it, this is a good sign. So even if it pulls back, it's probably going to try to do that in the future. Wow, big move on Tesla though. The biggest in 11 years. That's no joke. Let's move over to NVDA. Very strong hold still. Market looks pretty good. If you compare NVIDIA to semiconductors, you can really see why buying the best quality pays off. Look at the semis. Okay, they're holding up, but it's nowhere near as good as NVIDIA. So we'll still keep watching the semis, but NVIDIA is doing quite nicely. HSI, so the Chinese market, continuing to hold as best it can, not below 19,900 or 20,000 at this stage, which is of course a positive. We'll see whether it can close the week above 21. That would be a good sign. What about the Dow? Well, the Dow is weak. The Dow is doing pretty poorly. It could be moving down to 42,000, which is, I think, a pretty good support. So, of course, if that happens, the S&P might be sitting around 5,700 as well. The US 2K, of course, bouncing off that first zone. Still like the US 2K. I don't mind it here, but I don't know if it holds this stop loss. I think it'll have to be down below 2050. But, of course, our aim is eventually here by the end of the year. I'd like to see 2430. So that's what we're looking for. Nasdaq, up, down all around. The sellers in control at the moment. Obviously, the buying position turned into a break even. So at this stage, it's really just can the sell continue to hold? Daily 20 is the most important level to break out. If we break that, then we probably go down to first support. So be looking for this daily 20 to get wiped out on a few of the major indices. Then we move over to crypto. Wow, we said Solana was better than Ethereum. Have a look at this. The move on Sol versus, of course, Ethereum has been incredibly strong. And you can see here the breakout of Solana is just so much better. Still not to the targets of 186, but this has been a pretty good crypto. And I'd say in many ways, this has become the Ethereum for many people that are enthusiasts into the markets. Of course, yes, that's a simplified look, but you can clearly see Solana is moving with Bitcoin and not so much Ethereum. Ethereum is struggling heavily. So let's now take a look at Bitcoin, and things have improved over the last 24 hours. Taking out that major zone here was a big deal for the bulls, and while bears could still resume it, it looks better than it not. Coming off a level that we expected, of course, our first support zone, finding strength, and now we're kind of expecting that even a small pullback may be met by bull demand. Remember, a pullback in time, that is a correction around a key resistance, is actually a stronger trade than one that actually pulls back to a major support and then starts to bounce. Why? Well, it shows the intention of the overall traders. And if people are getting worried about this level right here, which I don't know they are, but if they are, that's going to be a big deal. Look out for our weekend video as well. We'll see if we can find some flows to see whether this continues to be kind of where money is pushing into, because we have seen strength in Bitcoin over the last coming weeks. So guys, that brings us to the end of today's show. As always, remember to subscribe and smash that like button. It really does help us out here on YouTube to make sure that more people are well informed about markets. Obviously, if you want to, follow us over on Twitter or X or whatever we call it now. We do post a lot of the charts here. And remember, if you're from New South Wales, you've got basically 3 slots left, I think, for our event happening next week, Wednesday, October 30th. It's going to be an amazing event. We're doing some thought processes over the next 12 months, what we expect for the election before and after. And it's just a great point of time to have a catch up with other people in the community. Make sure you get there. We're providing drinks and, of course, a little bit of finger food as well. It's going to be a great event. So, as always, I'm going to say something here to do with Tesla, because I know a lot of people are going to be feeling FOMO out there right now. Don't feel FOMO. There is always another opportunity. And remember, here on the channel, we talk about the abundance mindset. It's very important in investing and trading to know there's always another opportunity. This year, we've gone from utilities to gold to silver to copper to Chinese stocks to AI stocks to Tesla maybe over the last 24, 48 hours, if you were lucky enough to get hold of that island reversal. You know, it doesn't matter. There's always another horizon opportunity. And remember, guys, it's your hard-earned money. So if you're FOMOing, you could get stuck in bad positions. We've all been there. And that means you can't take advantage of the next opportunity. All right, I'll leave you with that. You have a fantastic day. We'll see you in the next one. Bye for now.